Rohr here with an early global view on Wednesday, November 5th, 2014. It's currently shortly after 7 a.m. U.S. Central Time. This is a little bit later than usual because we wanted to make sure we fully reviewed all the implications of the U.S. midterm election and other factors yesterday. And we'll be discussing how those impact the markets, of course. So let's take a look at what all this means for the markets so far. And what we know is, here's our short-term view of the S&P 500, hourly chart on the left, 30-minute on the right. And not surprisingly, as we had expected if the Republicans prevailed, this is up about $12 today, up at 2017. So going back to really get back up toward the best levels that the market saw back on Monday prior to the pre-election jitters coming in to yesterday morning. Even though the market stabilized and came back up, what was funny is that the hourly MACD did drop well back below its upper runaway band, joining the 30-minute that had already been below from the later part of last week on Tuesday. But the market spent the rest of the day after the early trade recovering. And even within that recovery, though, the adjusted, counting the push-up on the upward acceleration Friday on the Bank of Japan action that left the market gapping back above the 2,000 area, the adjusted, slightly more upward accelerated, upward channel support came in, and the market really refused to close below it until we got right out into lunchtime, and at that point was on a down break from 2007.5. Pardon me. And of course now that's been taken away. So we have further support, much like when the market failed to stay down on the down break going back to Monday the 27th from the 1957 area, and it pushed back up on Tuesday. It left the market strong all of last week. We have to see now whether this remains strong. And that's why we bothered to mention Mr. Obama's statement that's going to be coming along somewhat later today. They haven't announced the time yet. Is going to be very important. If he sounds conciliatory, it's going to be constructive. If not, then look for the market to come back under pressure, probably without getting too much above, if above at all, that 2018-70 high from back on Monday. And if it should escape to the upside, as we pointed out previous, and as we'll see on the intermediate term charts, the extended resistance is up into the 2045 oscillator to 2055 topping line on the weekly indications. And that pretty much does it for the short-term view of the S&P 500.